This is a demonstration of exercise 233, preparing financial statements and closing process. Beanish Company has the following account balances at December 31st, the end of its fiscal year, and the problem gives us the trial balance for Beanish at December 31st. In Part A, it states to prepare Beanish Corporation's income statement and statement of stockholders' equity for the year end December 31st and the balance sheet as of December 31st, and it tells us there were no stock issuances or repurchases during the year. So the first financial statement we need to complete is the income statement. So for the income statement, we start with our revenue. So we had service fees earned of $75,000, and we're going to subtract from that our rent expense of $18,000 per the trial balance, our salaries expense of $37,100, and our depreciation expense of $7,000. And that gives us net income for the year of $12,900. The next statement we need to complete is the statement of stockholders' equity. I have included the beginning balances for common stock and retained earnings from the trial balance. The problem tells us there were no stock issuances or repurchases during the year, so we know that this will be blank, and our ending common stock will be $43,000. Now we know from our trial balance that we did pay $8,000 in dividends to our shareholders, so that has to be subtracted from retained earnings. We also need to add to retained earnings our net income of $12,900 that we calculated in our income statement. So now we have our ending balances at December 31st for common stock and retained earnings, and we can complete our balance sheet. So to complete the balance sheet, we're first going to complete the asset side. The trial balance shows that we had $8,000 in cash, $6,500 in accounts receivable. Our gross equipment was $78,000, that's the original cost, and we're going to subtract from that our accumulated depreciation of $14,000. That gives us a net equipment of $64,000, which when we add to our cash and accounts receivable gives us total assets of $78,500. Now we're going to complete the liabilities. We see from our trial balance that we only had one liability, notes payable of $10,000. So that will also be our total liabilities. Our common stock from our statement of stockholders' equity is still $43,000, and our ending retained earnings is $25,500. So we see that our total liabilities and equity of $78,500 equals our total assets of $78,500. The B part of the problem states to prepare the journal entries to close Beanish's temporary accounts. The C portion says to set up T accounts for each account and post the closing entries. So I'm going to go ahead and just move the balance sheet out of the way. So we'll be able to see the T accounts as we prepare our closing entries. So remember, we only close our temporary accounts. So the temporary accounts are our revenues, our expenses, and our dividends. So I have already prepared the T accounts with their beginning balances, and I've got the beginning balance for retained earnings. We're going to close each of our accounts, reduce them to zero, and post the amounts directly to retained earnings. So our first temporary account is service fees earned. Since it's a revenue account, it has a credit balance. So to close that account, we need to debit service fees earned for $7,000 and credit retained earnings for $75,000. And if you notice, when those amounts post to the T accounts, service fees earned is reduced to zero, and you can see that retained earnings has now increased. Now we're going to close each of our expense accounts. Notice that all the expense accounts have debit balances. So to close those, we're going to credit each one of these and we're going to debit retained earnings. So for rent expense, we're going to debit retained earnings for $18,000 and credit rent expense for the same amount. And notice that that balance dropped to zero when it posted. Same thing for salaries expense. Debit retained earnings for $37,100 and credit salaries expense for the same amount. And it also dropped to zero. Next, we'll close our depreciation expense. Debit retained earnings for $7,000 and credit depreciation expense for the same amount. So now all of our expense accounts are zero. And now we're going to close our dividends. Dividends also has a debit balance. So to close dividends, we'll debit retained earnings for $8,000 and we'll credit dividends for $8,000. And now we see dividends is zero. And we notice that our retained earnings ending balance in the T account is $25,500, which is the amount from our stockholders statement of stockholders equity. So that is the conclusion of the demonstration for exercise 233.